This video is going to be a napkin math valuation of NIO stock. NIO's market cap right now is $38 billion, assuming a standard of around 40x growth multiple, in which you typically multiply the net income by 40 to account for the fact that the stock you're looking at is a growth stock. NIO would need a 950 million net income to be fair value for what the stock is priced right now. Basically what it did is 950 million times the 40 growth multiple. 950 million times 40 equals 38 billion. So how many cars would it take to reach that $950 million in net income? Let's assume NIO is an average EV producer. An average profit margin for an EV manufacturer is around 5%. So put this in perspective though. Tesla's profit margin on a Model 3 is 35%. Another reason to buy Tesla, but let's focus on NIO's valuation. To get a $950 million net income with a 5% profit margin, NIO would need to make $19 billion in revenue in a year. Basically what I did is 950 million divided by 0.05, or divided by 0.05 to get the 19 billion revenue. NIO's trailing 12 months revenue is 1.8 billion. Right now, NIO is priced for 19 billion in revenue. And CEO William Li told analysts that NIO could easily produce 150,000 vehicles a year without much investment or much change in what they have right now. Assuming they have the demand to sell the entire stock available, 150,000 vehicles, and around NIO's priced around 60K per vehicle. So 150,000 vehicles times 60K vehicles equals 9 billion in revenue. So NIO's max right now is 9 billion in revenue, and it needs to find ways to increase production and increase efficiency by 2. So let's take a step back and try to envision what NIO would need to do in order to be successful. So there are over 240 million cars in China right now. If they all eventually become electric, and NIO can capture just a 1% market share of the cars sold in China, it would sell 2.4 million cars. 2.4 million cars times an estimated 60K per vehicle would equal $144 billion in revenue. The revenue times a 0.05 profit margin, which means that NIO profits only 5% of the revenue. The rest goes to the expenses of making the car, manufacturing, marketing, or so on. So 144 billion in revenue times 5% profit margin means NIO keeps around $7.2 billion in net income. That times the 40 growth multiple, which is used for growth stocks, equals $288 billion in market cap. So that number converted to stock price would be $212 a share. It's a potential 10x from here, and all NIO needs to do is capture 1% market share of all the cars sold in China. It does not need to expand to the US, it does not need to expand to Europe. If it just maintains a 1% market share in just China, that is more than enough for a 10x. Speaking in terms of more short-term momentum, NIO has a clear bull flag. It's been going up and slight halfway down, then up again, then halfway down, It's on the new halfway up. It's in the new up and it's almost halfway down. Based on previous trends, it'll likely go back up. Also, it has a very common sign known as a bull flag, which is a huge bullish indicator commonly used for day trading. If this now is a good a time as any to get into the stock. There's more than enough potential, more than enough room for a 10x from here after the 1700% gain, because China is huge. If it can just capture 1% market share in China, that's all it needs. It's all it needs to be profitable.